Today is Friday, August 26th, and this is ADM Investor Services Weekly Market Wrap-Up. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, the Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Alan, let's start with this week's Federal Reserve Jackson Hole Symposium. What is the outlook for interest rates and Fed policy as a result of Janet Yellen's comments?
Well, her comments started out to be a bit on the hawkish side. She talked about the labor situation improving and hinted at the possibility of potentially a September rate increase. Initially, stock index futures declined on this, precious metals declined, but then the markets quickly reversed as traders took a second look at the comments, and in fact they may be a little bit on the dovish side, which we'll get into in a little bit. But so we still feel that the probability of a rate increase at the September meeting is very unlikely. If there's a rate increase this year, it could be in December or possibly not until next year.
And what do you think this means for the stock market?
Well, what really happened in Yellen's comments were they started out hawkish, and then she made some comments about the possibility of expanding asset purchases if the economy were to weaken down the road at some point. So this seemed a little bit unusual to be talking about future recessions, and I think this was the dovish part of what she had to say, and that's when stock index futures reversed and headed higher. So our outlook for the stock indices remains very bullish, and we still feel the Fed is going to be very slow to raise rates.
Steve, looking at the grain markets this past week, it was the week of the annual Pro Farmer Tour. What did the scouts say, and how did the market react?
I think in general, when they went out into the cornfields, they did not find the yields in every state that would verify the USDA's 175 corn yield. So I think the market thinks that maybe the crop isn't quite as big, but still it's not a game changer. You still have a big crop and you still have a big potential carryout. And for corn prices, they haven't really done too much. They lost 12 cents this week, and I don't look for them to rally much, but they're close to support. In the beans, especially in Illinois, they found a pod count that's historically record high. And so beans have lost 32 cents this week, 30 cents yesterday. And I think the market is concerned that in September 12th, USDA is going to raise the soybean crop estimate, and that suggests that when we look at USDA's price range, we might be at the higher end of the price range.
And is this seasonal pressure when crops are good? I mean, do you feel like this would be considered a normal market reaction this time of year?
If you have a big crop, it is. We have some seasonal charts when we ask a computer to give us a 15-year seasonal, and we lay over the current December corn and November soybean futures. Historically, we continue to leak lower in prices until October 1st, and that's when we make a bottom. So we don't know exactly when that price is, but historically we make a seasonal bottom on October 1st.
If you're a farmer, is there any protection to be taken heading into harvest?
I think that for the most part, prices have broke a large amount already. Farmers took advantage of the higher prices this summer in beans, but not in corn, so they have a lot of corn to sell. So there really isn't anything right now that they can do. Historically, we see some kind of bounce in prices after harvest. We could also see a bounce early next year, going into the South American weather and going into our weather. So, right now there's nothing really that they can do. Now, from an end user standpoint, David Hightower came out today and said for him, what he would do is he would buy a March 2017 put for 14.5 cents and then buy the futures. And he's looking to try to buy the futures at 329. And his objective is actually 421. And in the whole scheme of the trade, he's willing to risk $1,000. So here's another way where a farmer could actually sell his cash and go in and buy the futures and buy the put, and then protect himself if the market starts taking off and he sold his inventory too early.
Alan, turning toward the gold market, we've seen some recent pressure. Is this due to the recent hawkish comments from Fed officials? What is your outlook for some that call it a barbarous relic known as gold?
Well, it looked pretty barbaric over the last couple of days when it kept drifting lower and lower, but it held at the 1320 support area. Metal looks pretty shiny right now that we've advanced about $20 off of the lows or even more. So the outlook for the precious metals, including this barbaric metal gold, is still higher. Yellen's comments, which I believe are a bit off topic in the sense why talk about future recessions at this point and the possibility of further asset purchases. So the outlook for gold and silver is very good, very bullish, and I think we're going to see this bull market that has started this year or it was extended this year continue for quite some time, well into next year.
Steve, there are a lot of questions about the global economy and the impact it might have on food demand. The USDA is looking for record U.S. and world demand. Will this eventually help prices?
I think it will. I mean, I think it'll help prices in 2017. I mean, the pace of growth this year is not as good as the growth that we saw from 2000 to 2015, but people still have to eat. And so when you're on the bullish side of the market, it's all about more people eating a better diet, more protein, and that's offers support to prices.
Finally, can either of you comment on the crude oil market? Last week, Terry Rogensack of the Hightower Report cited that he thought we could be at a critical point, technically, for the crude market. What are your thoughts on the crude market right now?
Well, my thinking is that this big rally that we've had over the last couple of weeks, although we've given some of it back in the last few days, suggests that there is something changing in the fundamentals, something bullish, possibly some production freeze. So my outlook on crude oil remains positive, and I think we can see, of course, higher prices in crude oil for the rest of this year.
Conversely, you see a lot of traders talking about too much supply, and that the key probably is this OPEC meeting and whether they can, as a group, agree to freeze production. If so, prices would continue to go higher. But I think there are some economists and some analysts that feel that if they don't, this is a seasonal time of year when demand tends to slow, especially here in the United States, and so we could see a little bit more of a pullback.
I would like to mention that ADM Investor Services will be attending the Farm Progress Show in Boone, Iowa next week. So if you're attending the show, we invite you to visit the ADM tent, where we'll have lots of information to share with you regarding our services and the services of Archer Daniels Midland Company. Remember, the views and opinions expressed today on this video are solely the views and opinions of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like additional information about opening a trading account, please visit www.admis.com.